we're going to show how this mindset, it really starts with your mindset and those patterns. And that's what's nice about what you identified for this guy. It's not a money problem. It's a pattern. And a pattern is built off of habits. And some of these habits are very easily simply changed.
And they become self-fulfilling habits as well. When you keep telling yourself, I can't keep doing this. I'm working so hard. I am hustling. It's a constant, like, I'm doing all the things. I'm working harder, and then you're not seeing the wins. Because guess what? The one thing in life that we always talk about that's guaranteed happens. Jeremy knows what it is finally. Jeremy, what is it?
It's change.
He sings it now, folks.
Welcome to another episode of WealthWise Banking. I, Jeremy Huggins, am here today with Jason Sipple, and we're kind of really excited to talk about this concept that more or less hit Jason while driving. And it was an understanding that most people don't have a money problem. They actually have what's called a money pattern. And I love the way that Jason just made it so simple. And so we wanted to come today and talk a little bit about patterns, about where it is that your money goes, what it is that you're doing with it, how do you spend it. We kind of get into some of these abstract terms sometimes around infinite banking or family bank, and it may seem complicated. But as you saw in our last episode, where we talked with Connor, Jason's son, this whole process is simple. It's easy. We just make it complicated as adults. And what you'll find is that typically these patterns that you have, they were given to you by a system that you don't control. And that's where Jason and I are here to help. So Jason, welcome. You excited for today's episode?
Super excited, brother. Wow, you are a little bit passionate about this, maybe. If people are listening and you guys know us well by now, guys and gals, welcome back. We're excited to have you here. Thank you for your time, for your energy, for your attention to this, and for really caring deeply about not only yourself, but for those around you. And Jeremy, it hit me today hard driving home. I was like, holy cow, I was in the conversation. And, not to give the whole show away in 2 seconds, but we're going to walk people through this, what I realized, because I had a call yesterday and this guy got vulnerable. He got real and he kept saying, hey, and like his pattern, Jeremy, kept showing up like, I am working so hard. I'm doing everything that I can. I'm working overtime. I have own restaurants. I'm side hustling and doing Lyft and Uber and whatever I need to provide for my two daughters who are really young right now, 8 and 10, and for my wife. And I'm making these mistakes. And I bought my wife the Jeep she wants. And it was every single thing, Jeremy, was rooted in fear and pain and surviving. And I was thinking, this guy doesn't have an earning problem. He doesn't even have a problem about banking. He has a pattern that's showing up repeatedly. And thank God, he's finally recognizing it. And that's what kind of drove this conversation that we're about to dive into, because like my last name, right? Simple as Sipple. If you guys need that, just if you want to call me Simple instead of Sipple, you're welcome to. Some people do. I don't love it. But, let's keep things super simple. They don't have to be complicated. So, Jeremy, I'm as excited as you are. So let's jump into this. Let the people know what we're going to talk about today.
Yeah. So we're going to talk about how wealth is really engineered, it's designed, right? Like to your point, you can have money, people go out and create it, but the ability to keep it and multiply it, that comes through architecture. And I know that was a big, scary word, architecture, engineer, right? This sounds complicated.
I was like, I thought we were keeping it simple. I was like, what just happened?
But it's not, right? We're going to show how this mindset, it really starts with your mindset and those patterns. And that's what's nice about what you identified for this guy. It's not a money problem. It's a pattern. And a pattern is built off of habits. And some of these habits are very easily simply changed.
And they become self-fulfilling habits as well. When you keep telling yourself, I can't keep doing this. I'm working so hard. I am hustling. It's a constant, like, I'm doing all the things. I'm working harder, and then you're not seeing the wins. Because guess what? The one thing in life that we always talk about that's guaranteed happens. Jeremy knows what it is finally. Jeremy, what is it?
It's change.
He sings it now, folks. He sings it. It's change. Yeah. And so when this guy's air condition went unexpectedly, when his daughter needed braces, maybe not unexpectedly, but still it came maybe faster than they thought. When things started happening was when his wife decided she wanted a Jeep, or when the kitchen expanded, or just things that our wives are going to want and our loved ones are going to want. Like, money is just a tool. So when he kept getting stuck in this pattern, Jeremy, it was a lack of resourcefulness.
Mm.
It wasn't that he lacked resources. He made plenty of money. He made nearly 90 grand a year.
Hmm. Yeah, so really the a lot of it has to do with the identity, doesn't it? Like people have this identity around money and who they are and what they're supposed to be doing with money. Guess what, folks? That puts you back into that borrower mindset, all right? You're hoping that something's going to be left over. What we want to do is start making you into a builder. And you need to start with simply asking, how can I do something different? Just ask that question. Think about it in your own personal life. How can I do something different? Because if you don't interrupt the pattern that you have today, you're going to be right in the same spot next year and the year after that, and 10, 15, 20 years down the road. And then you're going to be like every other American that's going into retirement, still looking for a job rather than really enjoying the fruits of your life's labor.
And Jeremy, that's such an easy question, right? How can I do something different? Let's take that to another level for the folks. How could you optimize that question to be more intentional with what you're asking yourself? What comes to mind? Like I know we didn't rehearse this, it's not what we talked about, but what would be something, how would you optimize it?
Yeah, simply pay yourself first. Like nobody, we say this time and again, nobody cares more about your money than you. Not me, not Jason, maybe Uncle Sam. All right. He might care about your money more than you, but just start paying yourself first. Start there. If you literally start there, everything else will start falling into place. I would say that's the first domino.
That is the ultimate domino. Like if you can't go past go, if you can't collect your 200 bucks, if you can't do this, you can't go to the next square. You can't buy Baldwin Avenue or whatever it is next on the Monopoly board. You can't go to the green buildings and to the railroad and to the light blue and then to the orange and around the board. I can't
Mhm.
believe I just remembered that many. Uh, Actually, I think there is a pink before you get to the orange. So either way,
Yeah.
either way, you can't go to the next step if you don't pay yourself first.
Yeah, people don't argue with gravity, and you can't argue with this either. All right, simply put, if you don't know how to keep more money, you'll never build any money. You won't have the ability to multiply it. So first, figure out how to keep it. Then you'll be able to figure out how to multiply it. And the way that you keep it, pay yourself first. Just start there. It's simple.
And like you said, if change happens, if your car died tomorrow, are you going to be panicked or are you going to feel peace? And some of it's going to be about how you're feeling about everything that's happening too. If like when I was talking to this gentleman and it was pain, 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 but you know what he was ready for? Change. Do you know what he identified? And I told him, listen, brother, it's okay. It's not too late. You're
Mhm.
still young. You're not even at halftime of life yet. So whether you're 20, 30, 40, 50, 60, 70 years old, if you notice the pattern today, when's a better time than now to change that pattern?
Jason, I'm actually working with two 70-year-olds right now. Believe it or not.
I
They've
believe it.
decided after 70 years they've had enough and they've decided now they're going to become their own banker.
I have a whole nother episode planned for us and for the listeners, Jeremy, of a 75-year-old looking to possibly 1035 11 IULs. He's not done building. And he said he was looking for the right tool and he realized all of the leadership he got wasn't the right tool. But that's just an example. He noticed a pattern. He said he wasn't paying attention to it. It's no different than the conversation with the guy who was lacking resourcefulness in that moment because he felt trapped, stuck, worried, and stuck at that first level of Maslow's pyramid.
Yeah. So let's do a quick self reflection, right? If you have the ability to keep 10%, we'll just throw out a number 10%. Well, I like 10% because it's a nice round number. If you had the ability to pay yourself 10% right now, today, and you kept that over the course of a year, how much would actually show up for you when it mattered most? When you actually needed to replace an AC or, I don't know, take your family on a vacation? That pattern, you do it, the small daily habits built up over time truly build up momentum. So I like to start with 10%. That's where I started in life. I ended up moving, I said in a previous podcast, to 51% is where I wanted to go. But I'm also a little bit of weirdo. Just start small. If you can't start at 10, I would first say you're probably a liar. Because if I told you that you had to have a life-changing, operation tomorrow and you had to get the money, you're going to be resourceful. And it's actually the people who are more resourceful that are actually more successful with infinite banking than the people with the resources. Because that belief, getting interrupting the pattern, changing the identity, you know where your money's going. Typically, your money's going to things that don't pay you first. So you can figure out 10%. I guarantee you, if it matters to you, you will figure out 10%.
And it's really well said, Jeremy. You're identifying, you're hitting the nail on the head, and do not hear us saying this is easy. Do not hear us saying that this is going to be simple, but it is a one thing change.
Oh, I am saying it's easy and I am saying it's simple. You pay
Ah,
yourself first. You do
well,
pay
if it was
yourself
so
first.
easy and simple, why are 95% of Americans not doing it?
It's because that people don't want to. It's a choice. Like to your point earlier, they have bad money patterns. It's where does your money go first? It typically goes to Uncle Sam or credit cards or Tesla or Ford, whomever. It doesn't go to you.
No,
It's simple. Pay
no.
yourself first.
And when I was inspired this morning and thinking of this and thinking of the conversation and feeling the pain, I was feeling the pain of the guy, and it really shook me, Jeremy. It really made me upset because here he is telling me, Jason, I need your help. I want your help. And I served him the best I could in the moment by having him learn the first law of wealth, start the pattern of paying himself first. And from there,
Well, that gets into the second law that we've discussed before in a previous episode of don't spend more than you make, right? So you pay yourself first and then just identify where's that capital going. Don't start spending more than you actually have.
and that's it. And when I was thinking about this morning, I was saying, well, how did he develop this pattern? Right?
Hmm.
That was the next thing. How did he develop his pattern? 'Cause he told me about being a restaurant owner, owning two restaurants, owning one restaurant super hard. Imagine he was successful enough and smart enough to run two successful restaurants, right, Jeremy, down the Philly
And
area, like right outside of Philly. And then from
and
there, he's got a side hustle. He's building things. He's delivering value in other aspects of his life. He went out, took the time to go back to school when he was doing all three of these things and got his life insurance license and then realized that wasn't aligned. So here he is with the ability, the resources to go and get a job, to go make money. But the way the patterns all develop, like what I was thinking about is, oh, okay, he's little. He wants something. He wants to have something in exchange for his candy or, maybe comic books or whatever it was as a kid. So you start trading time for money. And then eventually you say, okay, well, now I need cars instead of a bike. And so now I need more money. And so now I need a better job. And now I'm going to have to put this money somewhere because no longer does it fit in my little piggy bank. So now you start going to a bank. And then the bank's your friend, right? Right, Jeremy? The banks.
oh yeah, that's why they give those little dumb suckers because they love you.
They do. And you can have any color you want. And you know what? If you're special, you can have two dum dums. And
Yeah,
so
that's what they're calling you as you're putting money in their system and their bank.
yeah, I mean it's just like the rocks in the movie in the Smithsonian that everything comes alive, right? Dum Dum, Easter Island, Dum Dum. And from this, so now your patterns being established because now the bank's there to rescue you and you give you more leverage, credit, where you start paying interest. And then you get married and they want something and you want to give everyone what they want because you want them to love you and pattern upon pattern upon pattern of taking on all of the risk.
All of the risk. I mean, that's actually the scary part, right? Going back to if my AC went out or I had an issue with my car, does it create panic? Does it create pain? Or have I become a builder? Have I taken control? Have I paid myself first? Do I warehouse my money in a system that has guarantees and absolute liquidity and control? And is this okay? Is this peace of mind? Like we talk about using it as an investment and how to multiply. At least, that's how I like to look at it. I'm okay with market crashes because I know that as a builder, I'm going to capitalize on the opportunity. And where do I get the funds? Well, I go to my banking system, not Wells Fargo. I go to my banking system and I pull that capital to buy at a discount. And it helps me multiply over time. So these builders that we're talking about, you, me, Connor, your family, our members, what rhythm, Jason? What's the rhythm that they follow? Like you talk about it, you have a money check-in every week with your wife. What's that look like?
Yeah, it is. It's being closer to your money. It's really getting in there and following I mean, once you follow the first law of wealth and start paying yourself 10%, if you get off track, when's a better time than now to get on track? We were off track for a year, Jeremy. I've shared that before. And I
Mhm.
noticed and I overcompensated and started paying myself 20%. Now we're slowly moving to work towards getting up to 38% of our income saved. That's our next goal for next year. But the reason we know that number and I can share it that quickly with you Just like you just asked, every week we sit down for an hour and we have a money conversation. We talk
And
about
it's
what's
not,
come in, what's gone out, what are we spending it on, what's coming up. Like we're preparing for what's coming up and what do we need to create.
and these are what, 15-minute check-ins?
We do an hour actually. We take the time to go through every single account. We talk about what's coming up. Like and then once a month we'll have a deeper conversation. Once a quarter we'll take a whole day.
So
So
you have a really in-depth like process, and that's why you're able to get down to, the detail of 38%. But for the average person that's out there who says, "Oh, I don't have time," well, again, I'm going to call you a liar. You're going to make time for what matters. But start small. Start with 15
well, the
minutes.
only reason you don't have time, I mean, we don't have to be so mean, call them liars, Jeremy, but the
Oh, I
only
will. I mean, I'm pulling off the Band-Aid, man. Like this is something I'm super passionate about. Like this is how change happens. You have to wake up. Like
And
get out
whether
of the
you need
matrix.
someone that's going to be militant and tell your ass the truth and rip that band-aid off while looking right at you, that's Jeremy. I do the same thing to you, but I'm here to play good cop today and tell you, hey, if you just love yourself a little bit more, if you pay yourself for, if you follow the first law of wealth of just paying yourself first, everything else we're saying becomes irrelevant. But the reason that 95% of y'all ain't doing it is because you haven't recognized the pattern. And until you
Mhm.
recognize you have pain, and how you recognize you have pain, you have discomfort. When you start getting angry at stuff, when you start getting upset around money conversations, when you don't want to talk about the things your wife wants to talk about because of the pressure you feel to go make more money. You don't need to make more money. You need to
I would
hang on to
rather,
some of your damn money.
yeah, I would rather you have discomfort about what we're discussing like right now and me calling you a liar than the discomfort and pain of actually going into debt and worrying about how you're going to finance things in life without burying yourself in more and more debt that you can't ever get out of, right? So start with a 15-minute weekly check-in. That's how you identify those patterns that Jason's alluding to. What's coming in? What went out? What leak can we get rid of? What is a win that we have this week?
Make sure you celebrate that win. More than anything, anchor in the wins. When you start high-fiving, hugging, and celebrating your money, you will think better of your money. Thank you,
Hmm.
Jeremy, for that.
Yeah, absolutely. So that it's just a simple 15-minute check once a week. Just look at, and guess what? You can automate that. We've talked about automation on these check-ins. That's why you can turn it to 15 minutes. But if you want to go and get into a deeper dive, then we recommend a 60-minute review on what you have. So that way you can identify these patterns. Again, they're money patterns. They're not money problems. They're
No,
money
they're not.
patterns.
They're not. And what a takeaway, what a gift that's going to be for everyone going forward that we recognize its mindset from the beginning. This is either you think you can or you think you can't. And I was watching a commercial last night and they put that quote right in the front. I'm like, I wonder if they know they're quoting Henry Ford. Jeremy, that's what I was thinking as I'm watching this commercial. Right. And guess who the commercial was by?
Who?
Ford. I was like, oh, well, doesn't make sense. Okay, that's a quote I say every day, but that is the truth about everything in life. You either believe you can or you believe you can't. And either way, you're going to be right.
Oh,
So
yeah.
if you're stressed, if you're worried, just say why.
Hmm.
And then ask, how could I not be? And
Hmm.
then maybe if you think of the wealthy person, say, do you feel like the people that have money maybe have a little bit more freedom or choices than you do?
Oh, maybe. Maybe they do.
Maybe
Maybe
they do.
that AC going out or having to pay for braces or some unexpected expense. Like there's a difference between people who are in panic mode around money and people who have the ability to just kind of flow and just be easy. Like just have a feeling of comfort and safety and not be in the scarcity mindset. Like you got to get out of that scarcity mindset. So why is it, kind of shifting a little bit here, Jason, why is it that we believe in infinite banking so much? Like, how does that fit into this pattern that we're discussing?
Well, it's perfect. It's a perfect next date. It is getting serious with your money. It's like, okay, well now that I've gotten engaged to my money, now that I've gotten close to my money, now that I want to be with my money, how's a little creepy, huh? What am I going to do next? What am I going to do next? I am going to put my money somewhere where it's going to work harder for me, where I protect it more and where it protects my family more. That way I can really really improve my relationship. And this is where the infinite banking concept comes in, doesn't it?
Yeah, I mean it's really the vault. That's what I think of it as. It's my vault. It's my Huggins family vault. It's a place where I can store my money safely. It stays liquid. I don't have to worry about some bank teller telling me no. It becomes a resource for me that I can use in real life milestones, whether I have an emergency or I have an opportunity, whether I want to go buy a car, whether I want to go buy a home, pay for a vacation, respond to unexpected events. I can go to my vault that I have control of that compounds even when I end up using the capital for that house purchase, for that vacation, responding to an unexpected emergency. That's my vault. And you can have one too.
You could have one too, and yours doesn't have to be called Jeremy's vault. You can name it whatever you want because it's your privatized system. And guess who you get to say goodbye to forever and ever is Uncle Sam. Tio Sam. Sayonara. Ciao.
And
Hasta
that's
la
be
vista.
That's
Beat it,
because these
dude.
policies are tax advantaged, honestly, right? They predate the 1913 IRS tax code. They're tax advantaged. They continue compounding, like all these other cool features and benefits as we talked about before. That's why we like to warehouse our wealth inside of our private banking system, is because if there's another, trust me, if there was another system out there that my friends didn't think that I was crazy for putting my money in, I'd put it in that. I would,
If
we
it
got
beat
it.
this
We know
system,
what
if
people
there's
talk
another
about.
system that was around as long with as much guarantees and much control as this. That's what you're saying, right? If there
Yeah.
was
I
something
mean,
better than this, we would do that instead.
yeah, because we know the stigma around the product, but this is different. We're talking about as a system and interrupting a pattern. We're using the product to practice banking. That's what we're doing. We're substituting someone else's bank for our bank, and we're warehousing wealth and a policy designed for living benefits. Life insurance is living benefits. Otherwise, it should be called death insurance.
Here's a quick exercise I just thought of, Jeremy. Go ahead, if you haven't already, in your mind, name your bank. What is your privatized vault, your banking system going to be called? Name it right now. Write it down, put it in your notes, put it somewhere where you can see it, put it on your mirror, put it there. Because you know why? When you see your name and bank or your last name and family bank, guess what that's going to do? It's going to shift your mind to being like, how do I do that?
Mhm.
And how do I do that? Because Jeremy, as we're wrapping this up, we already know that everyone listening is already in banking.
They're just not the banker yet. But I also kind of want to give them a 14-day builder plan. I want to, we're approaching the end of the year real quick, Jason.
Yes, we are.
And as we go into the next year and we start implementing the practice of banking, interrupting patterns, adopting new patterns, here's a quick 14-day plan for you, okay? One, choose a percentage. I like 10% to pay myself first. Start small if needed, but automate it. That's the important part here. So
Jeremy,
choose
I'm
your
worried about
percentage.
Thanksgiving right now. Can I take a break on the 14 days to eat cookies and maybe, have a glass of wine or something? Or I mean, with the holidays coming up, we got 14 days, brother. Is it going to be okay to slack a little and get back on track, or when are we starting? Help me out here. I'm thinking out loud what I'm already worried about with 14 days from now.
Money meeting Monday, right? So
Okay, okay. Make it easy.
start
Thank you.
start on a Monday and automate it. Pick a percentage, automate it. That's it. Number two, once you're doing that, the very next week, eliminate one leak in your system, okay? Cancel a subscription, some sort of wasteful spending, redirect that to yourself. That's part of building that percentage from where you are today to the ideal, what I would say it's 10%. Pay yourself first, pay yourself 10%. Then pick a goal. What do you want the money for? Is it for a house, a
Mm.
car, a vacation? Is it part of your peace of mind fund, right? Attach that percentage to a priority and then celebrate the win. That's what you need to do. Going into week two, you've identified a leak, you picked a goal, and now celebrate the win by actually using that money for something tangible. That's what we're looking at. So the 14-day plan that I want to put, pick a Monday, identify a percentage, pay yourself that amount and start automating it. Eliminate one leak in your system, pick a goal for what you want to use that money for, and celebrate your win. It's that simple. That's the 4-step plan that you can implement over 2 weeks to start interrupting the pattern and keep that pattern becoming a builder, not a borrower.
And once you do that, the next thing you're going to want to do when you start paying yourself, when you celebrate, when you have a little bit of joy because you've accomplished one thing that changed that pattern, book that conversation with us. Jeremy, how can folks book a conversation to learn more how they can become their own banking? Remember, they're already looking at the name of their system on their mirror in their bathroom, or maybe you put it on your windshield by the rear view mirror. So every time you look back, you're looking at something that's going to push you forward. So what's that look like for folks? How do they get
Yeah,
there?
go to wealthwisebanking.com. Simple. You'll have access to additional resources. We've got blog articles that you can up redirecting. Check out. I mean, here's a surprise. I'm going to have a book published here coming in the next month. Guess where you can get that from? All right. So we're providing you guys all the information to become builders, and we have gotten very, very good at helping people become builders and interrupting patterns and getting over their money problems and becoming healthy money patterns. If that's intriguing to you and you want to learn more, tune into the other episodes. We're putting out a podcast every single Wednesday. If you want to book that strategy call, wealthwisebanking.com.
Book the call. We're blessed as always to spend the time with you. Jeremy, thank you for your wisdom, brother. Thank you for being part of my journey, and everyone that listening, thank you for your time and energy. We take this with great, great, great responsibility.
We'll see you next time, folks. Take
See
care.
you next time. Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.